Harold, welcome back to F.A.C.E. How are you, my friend?
Oh, great. How are you?
Good. You want to show your video? You want to go on camera or you want to be incognito?
Yeah,
Your call.
sure. I got it.
All right.
Can you see
So,
me now? Yeah.
not yet, not yet.
Well, I hit the button.
Okay. Huh. Okay. Ask to start video. Try it now.
Um, yeah. You got me?
Yeah. Anyway, so I guess we'll skip it for now, Harold, because what you have to say is more important than, what you and I look like anyway. And here's a here's a look at Harold's institute, and we have some important things to talk about. I believe you want to start with China, and you're skeptical about this reopening in China, that it's not going to have the kind of bang for the global economy that a lot of people were considering. Now I see you, Harold. Okay, so
Good.
yeah, so why is it going to not be robust? Is it that um, COVID or just their economy is in worse shape than it was? And recently, China stocks had a great run late last year and into January, and they're under some pressure. So tell us what you think is happening in China besides balloons.
Um, well, Dale, I've been watching a lot of this far more actively the last couple of months. Um, I formed a new company with a fellow named Nick Linsman.
Yes.
Um, and Nick is a former big money maker for Brevin Howard and for Solomon and Febro Brothers and a number of other big traders. So the combination of my network and his familiarity with virtually everything that's tradable, the reason we did it is that some very big money operations in New York said, "Hey, Hal, would you come out of semi-retirement and run us a serious upscale premium service to advise us on the turmoil that we see?" So I've been
Okay.
following everything in great detail.
Okay.
Um,
Why don't we start with start with China, and a lot of what they do is reflected in what happens with their currency. It's a managed currency. We've had a pretty good run in both directions. What's China trying to accomplish
all right.
here with the yuan besides de-dollarization, which everyone knows
Yeah,
that's their
I'm
main
going
goal?
to bring you up to date because changes in Chinese policy were made 2 days ago by Xi personally. Um, Number one, the new dictum from um, Xi himself in writing was that we're going to give much less focus on trade. We expect the trade to be very soft. We're not going to have high growth in trade. So we're going to have to find growth domestically. And we are going to shift away from the policies we've been doing, and we are now going to focus on raising domestic consumption by moving around wealth to the people. Now, this is pretty important. And this was all in writing, given the night and day 2.5 days ago. But I don't think any financial news covered um, this new statement. The Chinese call it Qishi, Qishi. It's where the big policy announcements are made.
Okay.
Now, what what I expect is um, trade will not rebound. The demand internationally isn't there. New orders coming into China, Taiwan, South Korea, Japan, just negligible. There is no momentum for manufacturers trade. Of course, there's a momentum for commodities, but so we're looking at China as having to get on without that engine of growth that we're so used to for many years. And so the big question is, are they going to be able to have any growth at all if they're doing everything on the basis of domestic demand stimulation?
Is this how they do it? Harold, look at my screen. Is this how they do it? They're destroying their ghost cities. So they're going to take them down and build them up again?
Yeah, that'll be one of the steps.
I mean, do you believe this is happening? I mean, it could be photoshopped. I got sent this tweet that they are, demolishing their ghost cities.
Yeah,
you know what bothers me about that? Where the heck are all the ghosts going to live?
Yeah. Well,
anyway.
Well, now, to think about what this means, I don't expect Japan's exports to be strong. South Korea is in terrible shape. Their export outlook is really bad. The only country that has only major exporter that has some momentum still is Germany, and that's the specific deals between Germany and China to move some of German production to China, especially in chemicals.
Okay.
But it's a new world now.
Okay, how does this affect us? The fact that the rest of the world, that they're not focusing on trade, they're going to try and they've been trying to develop this domestic demand for a long time. Does the population have money, or are they still underwater on all of their real estate investments, which is what most of the population did?
The population has money, but they're very unwilling to commit it. They don't have any confidence in Xi. So what I think you're going to see for a while, passive response. Now, let me move. We can come back to this, but I expect China to barely grow, or maybe not grow, this year and next year and the year after. In fact, the Chinese century is now over. I mean, they got to here, but I think now China has peaked. It's not coming back. We're going to see, because of demographics, China is going to be shrinking year by year. And so.
Does that put us closer to war because of that, if they can't get it out?
Big unknown, because right now they're desperate to bring more foreign investment in. They're short of money, especially short of dollars. So I know a lot of commentators say they hate the dollar, but in fact, they need dollars to move the economy. And so that's why they've got the invitation out to Blackstone and KKR and everybody else. Please come, please invest. You're welcome. It's very temporary. And me, I wouldn't put any money in China right now. I'm very close with the.
We have a little internet issue. I don't know if it's me, or I believe it's Harold.
It's not you, Dale.
Okay. Yeah, he's frozen. Are you back, Harold?
Okay. Yeah, it seems to be now. GIC is, almost $800 billion sovereign wealth fund with a very big involvement with China, because it's Singapore. A lot of the people in Singapore are Chinese. Right. And my friend, the chief investment officer, just announced that they are rolling back their investments in China right now. Now, the rest of the world didn't really realize what that meant, but this is the number one expert on China. And if they're becoming cautious, I'm sure they're telling everybody in Wall Street time to be very cautious. And they are telling the big pension funds, maybe you better start having a new look at your portfolios, because if you have a lot of stuff in China, you may want to be backing out of it. So now there's something new going on that you don't see in the press, but there is bipartisan support in the Senate, both parties. We have
They seem to always agree about China.
Yeah, that's the point. You got
Yeah.
people in the Senate, they can't agree on anything, and all of a sudden they're looking at each other and say, well, at least we can agree on China.
Right.
And so
That's it.
the pressure is to put in a review system for outgoing investment from the US to China. In other words, a reverse of the existing system where we control imports and purchases. But this is not a small thing. The White House is working on an executive order. This is probably on a timetable of 5 or 6, 7 weeks. And the Chinese know it. So they're freaked out that we may be coming to a point where we have a real break in the flow of investment with China. So China, if you're an investor, I have to say right now China is not investable until they get through whatever they're going to do about domestic consumption. It looks really troublesome. And
when nations' economies are in trouble, and it's like the tail wagging the dog, right, Harold? I mean, they've had designs on Taiwan. They really didn't want to maybe not risk it at a time when they were generating that kind of growth. But now maybe they need to draw the public's attention away from what's happening economically and do that through nationalistic actions like going for Taiwan. Are they going to make a move here?
I don't think so. I think what's happened is the technology sector inside China is quietly pounding on Xi and the Politburo. We cannot afford a break with the US right now. We're not ready. If we're cut off from all investment in technology with the US, we're we're not yet equals. And we'll be in trouble. So I mean, there'll be huge pressure on the leadership. Don't mess up the US-China working relationship. Turn around and find a way to get along better. So we'll see what happens. But Xi Jinping has made several big turns. I mean, no one expected him to completely change the lockdown policy all at once.
True. Good point.
So he's capable of big change for survival. I mean, I think what's not seen is there's a huge amount of public unrest. Now it's taking the form of what's called the white paper revolution. So as not to get arrested, demonstrators all over China are simply holding up a piece of unprinted paper. And when they do this, crowds gather in the hundreds and thousands and tens of thousands, and in fact, in many cities, hundreds of thousands. Nothing is said that is illegal. Piece of paper without any words on it. What it's demonstrating is we're unhappy with everything you're doing. And that is now pretty widespread. We don't see it because the Chinese don't want that broadcast. So there's a lot of turmoil going on inside. And I don't know whether she can get domestic growth from just uh, beefing up consumers. Now, let me shift to Japan because it's a little bit part of the puzzle. The choice of Ueda for the Bank of Japan was handled very secretly in Japan. Now, I've been dealing with Japan for more than 50 years.
Okay.
So let's say I've been pretty much inside this. The final decision of the prime minister personally, without consulting his people, was to choose Ueda, and that was on the basis of his top people talking on the phone with Powell and with Yellen. Ueda is an MIT graduate, but he's, just like Bernanke, and quite a number of, there are innumerable MIT grads. They're all buddies. They're all alumni. He was chosen because he's a buddy of several of the central bankers around the world. And what the prime minister wants is that we're going to have to change policy, but let's do it in a way that doesn't upset the balance worldwide. Because if we make a big shift in our yield curve control, then there'll be an avalanche of repatriation. Money will come home to Japan.
Yeah.
And that will completely destabilize the bond markets of Europe and the US.
That's why they changed policy to begin with last year, was because the JGB market had become, it really wasn't trading well. It wasn't operating. They were having problems with that.
Well, they
dysfunctional it became.
Ueda is going to be behind the curtain talking all the time to the ECB and the Fed and Treasury. He knows a lot of the people. He speaks good English. He's going to be the first time Japan has had that kind of a BOJ governor. So keep an eye on it. This is much more sophisticated. And he's very mindful of not creating an avalanche of repatriation that would completely throw out the world bond markets.
Okay. So he would want the yen not to appreciate. You'd like to see some stable yen. Where around this 135, 135 range.
Well, he needs to get the interest rate up a little bit more, but he doesn't want to do it so high that money is encouraged to just leave the US and come to Japan. It's borderline what that trade-off is, because it's not just the exchange rate, but the cost of hedging. And so it's a very delicate time. But that's, let's say, under control, because you got somebody who's talking to our people in the US and the
ECB. We've expanded the country club to finally include Japan.
Yeah.
And he could come over and sing Kumbaya with Bernanke and Yellen, and they could all gather around the campfire. And now Powell, like Powell did. Okay. All right. So more central planning in line with US aims. We have, I'd like, if you don't mind, I think we've covered China and a little bit on the central banking side of Japan, but you sent me a piece, Harald, that no one's talking about. Everyone's talking about how well prepared our major banks are for a recession or a credit problem. And you have been writing about the shadow banking system.
Right. Yes.
And so, I mean, why don't you tell us what it is as far as magnitude in what's going on in the shadows as far as size compared to what's happening in the daylight at Wells Fargo, etc.
Dale, you know very well that when we had this financial crisis 2008-9, the problem was not the banks directly, it was
derivatives.
Not derivatives and non-bank lending.
Okay.
there was just, and the non-bank lenders, they didn't have reserves. So when things began to get rocky, I mean, they immediately were near insolvency. So everything began to, and once that happened, then our banks that had been lending to the non-bank lenders, they had to, make calls, send some money back. You're at risk. So
They called
everything
in the
came apart.
loans. They
Yep.
called in loans. Okay.
Yeah. Now, at that time, non-bank lending was maybe 60%. Well, actually, it was about 50% of total lending going on.
Okay.
But today, non-bank lending is about 50% bigger than the total of all banks in the world.
So it's 150%.
Yeah, and
Sounds
they
like
have
GDP.
they're unregulated. They don't have, none of them have adequate reserves, and it's big and small. I mean,
Is it companies
Blackstone,
like SoFi, Harold? Companies like SoFi, and can you
yeah,
name a
but
few?
yeah. Well, I would put at the top of the list Blackstone, KKR,
Okay. Yeah.
and
Okay.
and then for example, Sequoia silently has a large number of non-bank arrangements with projects in China, and that may get a sour look from our government. We're helping the Chinese too much. It's far more wide. This is much bigger than everybody thinks. So I foresee some trouble, some within the next few months, and this is going to cause a credit crunch because these non-bank lenders are going to be unable to go to the markets for overnight borrowing. We're gonna have a liquidity crisis, a dollar shortage. So everybody's forecast is about everything stays as it was, but I don't think that's going to happen. I think somewhere during the course of the middle of the year, we're going to have an event like we had in 2008, and it's going to catch everybody by surprise. So the work that I'm doing now with some very big financial institutions in the U.S. is warning that this may be a mammoth problem, and don't be caught with
Your pants down.
exposure. So
All
and
right. So where should people hide going into a crisis like this? Cash in your floor safe.
yeah,
Do you think there's going to be bail-ins if this happens, Harold?
I don't know what the Fed will do. The last time there was a problem with bad corporate loans, not so long ago, the Fed had a choice. They could have set up a resolution trust and pulled out the bad non-bank companies, but they didn't. They just bought all
Yeah.
corporate debt indiscriminately. I think
Yeah, well, people aren't in the mood to bail out banks, but they don't realize if we don't bail out the banks like we did last time, we're going to be the ones that are bailed in, our deposits in our banks, right?
That's right. So we've got a shock coming this year, a big one.
Okay.
Now, how will that work out in the currencies? The dollar is going to be much stronger if there's turbulence because
Yeah.
it's the only safe place for the Europeans and the Asians. So I think we're going to see the dollar slowly edging back up. Doxy is not going to stay where it is. It's going to edge up because of this underlying huge uncertainty. And the renminbi is going to slowly weaken and get much weaker. But people will worry, is that going to mean that they'll sell us more stuff cheap? And the answer is there's no demand for manufacturers trade.
Here in the US, there's no demand. We already
Yeah,
have a,
no demand anywhere in the world. I mean, there's just, if you look at the top exporters of the world, Taiwan, South Korea, Japan, China, and Germany, they're all suffering no orders. And
Okay.
I know everybody looks at other data, but I'm always looking at new orders because it tells you the next 3 months
Okay.
or next 6 months. And the demand for manufactured trade is negligible.
Okay. So that must mean even though they're painting the US consumer with record debt still resilient, that we're going to have a demand problem here in the US that has to come into the markets.
Yes.
At the same time, we're having a credit event. That's a
Yeah,
pretty toxic cocktail.
Yep. And the
Okay.
size, everybody should think about it. The size of the non-bank lending is now way bigger than the total of the banks.
Yeah,
So,
1.5 times you're telling me.
yeah, that's right.
All right. Well, I tell you what, Harold, I mean, a great time for you to be with us so that we can think about this and take some steps to not be caught with all the cattle going into the
Yep.
slaughterhouse. And I also want to wish you, a lot of success with your new venture that you have going on with Nick and your current one right here. It's where you could
Yeah,
follow.
well, I was surprised, but some of the biggest houses have come to us, names that you'd be surprised, but some of the biggest public pensions in the U.S. I mean, I won't say which one, but this week, one of the very biggest public pensions got in touch with us and said, we want your advice on reviewing the entire portfolio.
Okay, well, aren't pensions really at risk because they had to go out on the risk curve with zero rates, and that they're stuck with a lot of bad paper in the bond market, and that they may be the pension guarantee fund is not big enough? And didn't Biden just offer or give $500 million to the Teamsters to shore up their pension? Huh? So we're going to have a pension crisis everywhere.
Yeah, I think that's right. And a lot of those pensions, particularly on the West Coast, they're deeply involved with
real estate
investments in China.
Oh, okay. Yeah.
They're very exposed. So if China's in trouble, a big chunk of their portfolios, maybe 20%.
Yeah.
Is at risk.
Well, okay. Well, I've been talking to Harold for a long time now, and he doesn't say these things lightly. It's not out there to scare you, so you could click on his interviews and have more followers. And really appreciate you sharing, what you share with other people that I'm sure are paying customers with our community, Harold. Really appreciate it.
One thing to take away from everybody regarding China is I think China is going to be the new Japan. I think they're going to have at least a couple of lost decades starting now. Okay. So forget about, China coming to the rescue. They're not going to be doing that.
Yeah. They may help drag us down, in fact.
Right.
The opposite. All right. Well, Harald Malmgren, follow Harold at Hal's Rethink on Twitter, and say hello to Nick, and appreciate your work and filling us in on a topic that no one's talking about, the shadow banking system. Harald Malmgren, everybody. My friend Harald Malmgren, filling us in. Thank you, buddy.
Nice to talk to you, Dale. Bye.
All right, Harold. So that's a wrap, everyone. So get ready for, some wild things to happen, and protect yourself and an ounce of prevention is worth a pound of cure. You could join the team in 13 minutes on the morning edge, and don't just count your pips, count your blessings. Everyone's thanking you, Harold. Thank you very much again from all of us here in F.A.C.E. Adios.
Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.